And on the line with us is Jonathan Williams, Chief Economist for ALEC. Jonathan, how are you, my friend?
Well, doing great. Thanks for having me back and coming live from our meeting here in Scottsdale, Arizona as we kick off our ALEC States and Nations podcast. I'm really excited to get things kicked off here this afternoon.
Well, thank you for being on. We talked a little bit about ALEC and the influence that they have had in the past. We were trying to give our audience, kind of an overview. A few years ago, ALEC was in the crosshairs of the progressive left, which is a very good thing. They were out to really get you guys. Tell us a little bit what that was about and what the issues that the progressive left had with ALEC at that time.
Well, that's a very good point. I mean, bottom line is those that believe in big government and so-called progressive ideas that really want to remake America in an image that certainly was not intended by our founding fathers or certainly by those of us who value kind of the quintessential American ideas. They viewed ALEC and most conservative groups as a major threat. And I think in one way, it's a badge of honor that we as an organization that's been around now for 50 years, we're seen as that big of a threat, pushing conservative free market educational ideas for state legislators all across America, whether it was tax cuts or stopping ESG or supporting school choice or whatever our supposed sin might be. They tried to use what they now have taken mainstream, which is this cancel culture, to bully and intimidate our supporters, whether they're businesses or individuals, or bully legislators from being involved with us just by simply the virtue of us, pursuing conservative free market ideas. And, unfortunately for them, unfortunately for us, I should say, they were a failure at that. They tried, they threw this kitchen sink at us. I mean, they had us as a feature on MSNBC, and Van Jones and others tried to make us out into the conservative boogeyman. They tried and failed, and ALEC has emerged from that. That was 10 years ago. Active, bigger organization today than we were back when they really tried to attack us.
Jonathan, as you know, home sales are a huge part of the economy. Last week, it was reported that home sales fell to a 13-year low last month. And here's something that really was surprising to me. I've read that some homeowners are actually selling their houses for less than they paid for them. Have you heard about that?
Well, it's really concerning, and I'm glad you're bringing it up because I think, this is one piece of the economic puzzle of why I'm maybe more pessimistic than some that think, hey, we've emerged from this problem unscathed. But as you see those numbers on either new home sales or, just the existing home building stats that we're seeing out there, depressed. I mean, because of, look at the cost to the average individual now with mortgage rates at, 7 or 8% versus what people were getting at 3% a couple of years ago at the end of the Trump administration. And so I think this is a major problem for the economy going forward. Is it's going to lock people into housing, and they have a great loan right now and their payments are where they're at. And even if they, let's say, cut their job, they're not going to be able to afford that extra $500 or $1,000 a month to basically, have a different house at this point with the higher mortgage rates. This is, of course, Chris, the consequence of the big government spending agenda of the Biden administration and the left in Congress that want to spend their way into oblivion that we're crossing this $34 trillion debt threshold here in the coming weeks, likely. This is the cost of that. That's the cost of inflation. It's the cost of interest rates going up as the Federal Reserve, tries to scurry to get to the bottom of inflation. And that's obviously the painful way to do it. Nobody's really taking a page right now from Ronald Reagan as they should be, which is this is the time to cut taxes and increase productivity and use that supply side Reaganomics way of getting out of the situation that we're in, not the painful way of raising rates and then, of course, having unaffordable for Americans. That's a travesty.
We're speaking with Jonathan Williams, Chief Economist for the American Legislative Exchange Council. Jonathan, one of the benefits of living out in the Midwest, besides good, wholesome values, is our gasoline prices are much cheaper than they are in the coast and on other parts of the country. I was out here back in September in Arizona. I went to a Dallas Cowboy Phoenix Cardinals game, and that's when I noticed that gas prices were significantly higher out here than they were in the Midwest. The administration is touting the fact that gasoline prices have declined for 60 straight days. Is that a good thing or bad thing?
Well, there's no doubt that, this is a positive thing that gas prices are coming down slightly. This is, historic trends or gas prices come down towards zero, and Thanksgiving anytime is a low for the year in terms of gas prices, right? So I think the question otherwise would be if we had really an administration in Washington, D.C. and a policy environment that was more supportive of developing our own natural resources here in the United States. I mean, obviously, we've seen a bit of a relief at the pump, but I think that doesn't answer the counterfactual, which is what would have happened if we would have actually unleashed the private sector in a greater way by removing regulatory barriers on building new refineries in the United States or being able to develop oil and gas safely on federal land that the Biden administration has really choked off really since day one and really killed the pipeline ideas, of course. And so many things that, add to the energy dominance of the United States are being, really throttled right now. And, yes, gas prices are down slightly. I worry that they're going to tick back up again next year. This is obviously a function of supply and demand right now. And with some of the unsettling events that are going on internationally, there's been a bit of depression on the demand side. But I think you have to look at, how can we make things even better to make America energy dominant again, that we could be a net exporter that we were during the tail end of the Trump administration. I think obviously that needs to be the goal to rid ourselves of any kind of encumbrance to countries that don't have our best wishes at heart.
Jonathan, where do you see the economy next year? Every time that we think that the economy may be heading into a recession, we have higher job growth than is expected, and then we don't. There's talk that the Federal Reserve may even cut interest rates next year. Where do you see things?
Well, that's it's a great crystal ball question, and you listen to the best of the economic prognosticators out there, and you hear mixed bags always, right? We've been a incredibly resilient market so far as we've been able to avoid the worst of a crash landing. I'm not so confident that we're going to have a fully soft landing that Chairman Powell and Janet Yellen and others have been trying to orchestrate. I mean, it's a whole lot of manipulating of financial markets and monetary policy to try to get there. I think the bottom line is with $34 trillion in national debt and the issue of higher interest rates now, you look at the debt payments just on servicing the debt federally now. You're looking at somewhere in the range of the complete Department of Defense budget now is going for nothing else but paying a higher interest cost on our federal debt. I think that we really have to worry about what kind of would keep me up at night thinking about potential problems with the economy is having some sort of a sovereign debt crisis, right? Where we have interest rates continuing to spiral, inflation being stubbornly high, and the cost to service a much higher debt at $34 trillion versus, let's say, just at the start of the Obama administration, we were under $10 trillion of national debt, and we still thought that was potentially problematic. Now you've got much higher interest rates, much larger debt numbers, and that's something I think that ought to really worry us going forward. And this is a bipartisan problem, as you know, overspending in Washington, D.C. That's why I was so hardened, Chris, by Speaker Mike Johnson and his idea when he took on the speakership just recently of having a bipartisan debt commission coming together to study the effects of overspending and actually start to dig ourselves out of the hole. That's obviously the first step. When you got a problem, stop digging the hole deeper. That's something that Speaker Johnson, I know, is committed to in Washington. And that's a really refreshing piece coming out of the land of make-believe, as I always call it, Washington, D.C.
Mm-hmm. Jonathan, I read a really disturbing report, maybe been a week or two, that said for the first time ever that the interest on our debt is going to top $1 trillion. What does that mean to the average American? We're talking about numbers here that are so large that you really can't even fathom it anymore. But what does it mean now that the government is paying $1 trillion on our debt? What does that mean to us?
Well, it's horrible. I mean, and what are we getting for it? Absolutely nothing. There's nothing of value that $1 trillion that we're spending on the interest cost of our debt is getting us, right? I mean, what could we do with $1 trillion otherwise in terms of lowering taxes on hardworking taxpayers, including building additional, infrastructure if it's needed? I mean, there's a whole lot of things that are needed in this country. And let's say if we're going to spend $1 trillion, let's get something for it instead of just having it wasted on payment for past sins of overspending in Washington, D.C. Obviously, I'd like to see it go back to taxpayers. And we, have a situation now where, this is the other reason I'm somewhat pessimistic of not getting a soft landing, is we have the coming expiration of the Trump tax cuts, the 2017 Tax Cuts and Jobs Act. If Congress does nothing and continues to be gridlocked, which it's very good at right now, those go away by the end of 2025. And that is a real threat to individual taxpayers, the child care tax credit, to the lower rates, to the enhanced standard deduction that we saw that were the things that fueled the economy and the growth during the Trump years. That all goes away if nothing's done. And I think that's a huge problem going forward between that and the interest costs on the national debt as rates continue to rise. Those would be the two things that we must address, I think, to really have a shot at a soft landing going forward.
We're speaking with Jonathan Williams, Chief Economist for the American Legislative Exchange Council. Jonathan, you've got my partner running all over the place, but he is with us now.
Jonathan, we were just in the same room together. Now we're in different places here, but this meeting is really incredible. Jonathan, talk about in the last few minutes we have here what the next 50 years holds for ALEC and why it is such an important part of the public policy fabric of our state legislative network all across the country.
Well, it's a great question. As you know, Tim, we just celebrated that 50th anniversary as we were together. I think I was on the show the day that we were celebrating in Washington. And we think a lot about that. And, we think about an America over the next 50 years as ALEC is successful, is an America that values this idea of federalism, right? When you poll the average American, ask him what federalism is, I have a feeling that our public education system has failed us because most Americans think federalism means more federal control over people's lives. When you look at the founders' intent of federalism under the 10th Amendment, that, of course, is to get the federal government out of things and actually empower states, but more importantly, empower people to make decisions for themselves. And so as ALEC is successful, I see more power devolved to the state level. I mean, I think we ought to get back to the idea of Secretary DeVos and originally of President Reagan of why in the world is the federal government in the business of having federal education department bureaucracy, right? This is something in the Reagan Republican platform that he called for the elimination of. It was just created during the Jimmy Carter years. And it's something that, the huge amount of bureaucrats that work there, not a single child, not one, Tim and Chris, have ever been educated directly by the Federal Department of Education. This is a bureaucrat's dream. And yet we could take that money from the Federal Department of Education and give a scholarship to every single school-age child and family across the United States. I mean, those are the kind of ideas as ALEC is more successful. We have, 80 members of Congress who are ALEC alums, including Jason Smith, our good friend that served as our ALEC chair there, and now chairs the Ways and Means Committee, the powerful Ways and Means Committee in Washington, D.C. As we're more successful, we're going to, look at these ideas to devolve power away from the cesspool that is Washington, D.C. and back into the states, into the hands of families. That ultimately, I think is going to be one of our greatest successes as we go forward over the next 50 years. Of course, fighting for the limited government free market policies across the board, whether it's taxes or energy or education freedom, those are the things obviously we're going to be working on day to day. But I think it's got to be a focus because, we as conservatives, I think we lose when the decisions are made primarily in Washington, D.C., but we are overwhelmingly winning right now when the decisions are made in the 50 state capitals.
And Jonathan, it works, doesn't it? ALEC works, right? After 50 years of ALEC, after 17 years now of the Rich States, Poor States Index, free markets, and not ALEC the organization, but ALEC as the idea machine, right? Free markets, federalism, limited government. Jonathan, you always talk about the 50 laboratories of democracy. The states that have implemented ALEC model policies voluntarily through their legislative leaders, they're the ones that are leading the country in economic prosperity, which has resulted in better families, better economic situations, and more freedom and liberty in those states, hasn't it?
Well, absolutely. And you make such a great point because just in a couple of days, we're going to have Gavin Newsom, the governor of the failed state of California, debate Ron DeSantis, the governor of the free state of Florida. And we're going to have that contrast, right? It couldn't be more stark in terms of laboratories of democracy and which states are following the ALEC playbook of free market policies across the board. This is really going to be essential, I think, for America to do well overall and to get out from this economic challenge that we have that we're in the midst of right now. America needs to be more like Texas and Florida and less like New York and California. The proof is in the pudding, right? I mean, this is not even a partisan issue, right? I mean, we've had these issues transcend partisan lines, or at least they should. We hope that Democrats across the country pick these ideas up as well. But, we look at one of the biggest things that we look at is obviously if you're a state that's successful, people are trying to come to your state. If you're in a state that's not successful, people are generally trying to leave your state. And where Americans continuing to vote with their feet, they're leaving by the hundreds of thousands out of places like California, New York, and Illinois. And they're going to places that value economic freedom and the ALEC message of limited government and free markets. I mean, this is the essence of why federalism is so important, too, and why I think, coincidentally, the Biden administration and those on the left want to do everything they can to centralize power in Washington, because when states have to compete with each other, guess who wins? Individuals win, businesses win, taxpayers win, and that's a threat to the big government philosophy.
We've been speaking with Jonathan Williams, Chief Economist for the American Legislative Exchange Council. Chief Economist. Jonathan, thank you so much for your time, and look forward to seeing you in person here in Scottsdale at the ALEC conference.
Absolutely. Always great to be back with you, gentlemen. Thanks for being here.